Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, Romaine Bostick, Caroline Hyde, Taylor Riggs in the studio counting you down to the closing bell. Joining us right now to take us beyond the bell, our global simulcast in force, Carol Massar and Tim Stenovec, bringing together our Bloomberg Television, radio, YouTube audiences worldwide and universe-wide. Carol, let's start off with what I guess right now could be called a rally. We came into today, it looked like stocks were heading down, and right now, as we head towards the close, we're near the highs of the day.
Romaine, I was listening to Charlie Pellet earlier. I mean, it's been a volatile session. We've seen about a 300-point swing on the Dow Jones Industrial Average. You're right. We're pretty much at our highs of the day, and I don't know whether there's just optimism over some of that economic data that we continue to pour over, Tim.
Yeah, I think so. I mean, the data today really looked good. Those weekly jobless claims coming in last week at 498,000. It was a new pandemic low. It beat the median Bloomberg estimate of 538,000. Really tees us up for tomorrow for the most recent jobs report is expected to be a big one with could be over 1 million jobs, guys.
Yeah, Tim, and I think it's funny. I mean, all jokes aside, we were just speaking with Jonathan Golub, Romaine, and what he said is this is not the moment in time in this economic cycle to be looking for places to hide. This is a classic risk-on moment. This is when you take on that risk, really lean into that, and this is sort of that upswing that we continue to see. I won't make a joke, but maybe Jonathan Golub's comments on risk-on were the buy signal.
Yeah, and let's put those jobs numbers in perspective, too. I mean, you mentioned it's at 1 million. Those numbers have actually been coming up pretty significantly. Yeah. Remember, a couple of weeks ago, the consensus estimates was around 950,000. So a lot more people are jumping on board here. As I was teasing Taylor when you look at the median here and you go above that median, you got several people, 7, 8, 9 economists right now are predicting 1 million or more. You got Jeffries right now predicting 2.1 million as we get the closing bells here in New York. You are looking at a record high on the Dow Jones Industrial Average here, 34,541. Going to take a minute for that to settle, but right now you are up 0.9%. The Nasdaq up 3 to 0.4%. The S&P 500 0.8%. The Russell 2000, which had been in the red all day long, going to finish the day flat.
Meanwhile, we got some breaking news. This time it's coming from the Federal Reserve saying asset prices may be vulnerable if risk appetite does indeed fall. We've also had Lyle Brainard coming out saying Archegos shows a limit of visibility on hedge fund risk. Potential hedge fund risks show a need for more disclosure. We've already had, of course, the SEC chairman giving evidence in terms of frothiness, in terms of retail activity. But this time it seems as though the Federal Reserve's once again signaling that, look, asset prices, they are high at these levels, Carol.
Yeah, we've heard this before, certainly from Fed officials. And what's interesting is we're going to watch futures and see if there's any pullback on that comment, because you do wonder if it happened just before maybe the close, whether or not there would have been an impact, because we ultimately ended at our highs of the day. Keep in mind the NASDAQ up the first time in 5 days, Taylor.
Well, home prices, anyone? Carol, I leave you at that. When we talk about asset prices, let's get back to these markets. Like you said, it is green on the screen for our radio audience. It is telecom. It is food, staples, banks. Those are up 1.3 to 1.4%, as those are really the leaders here. You come down to the laggards. Interesting, on our worst performers, usually it's all red. There's actually some green in there because there were only 5 subsectors that were the worst performers today. We know them very well for our radio audience. You're off anywhere from 0.1% to 1.4%, Carol. It's the auto companies, it's the chip makers, it's further troubles around some of those supply chain issues that we continue to see.
Yeah, we got a bunch of earnings we're waiting for. In the meantime, let's go to some of the day's gainers. Kellogg, let's say it out. Kellogg up about 7% in today's session, gaining amid an unexpected organic sales growth in the first quarter. Peloton, I want to mention, because they're going to be reporting their earnings after the close. This is going to be very closely watched after yesterday's recall, where the stock was down about 15%. It actually gained in today's session, but Peloton, as you can see, just eking out a little bit of a gain. Regeneron also seeing demand for its COVID therapy as vaccinations drop. So this stock was also moving up about 3.4%. And Activision, that was one of the earnings we broke down yesterday, a gain of 3% in today's session on better than expected view when it comes to 2021, Tim.
Yeah, Carol, a lot of the companies that reported earnings yesterday are lower today, starting with Uber, a company down more than 8% today. Stock questions about short-term profitability given it had to pay drivers more to get them back on the roads. And then, of course, the new regulation over worker classification. Redfin down more than 15%, Rocket Companies down more than 16%, and then Etsy down more than 14%, Taylor.
Yeah, Tim, thank you for coming to me. We're getting shares of GROUPON that are crossing the wire, so let me pull those up as you bear with me. And we're getting some of the earnings. First quarter revenue looks like it does indeed beat estimates. 263.8 million versus 227.6 million, Romaine, as we await further down that income statement. But Peloton, the leader.
Peloton 3Q revenue 1.26 billion. The estimate was for 1.12 billion. That was the fiscal three-quarter number. The 3Q loss per share 3 cents. The street was looking for a loss of 20 cents. So on the top and bottom line, this is a beat here. We are, of course, looking for a little bit more clarity about the recall of those treadmills, and of course a little bit more of a forecast here. The company says that it will offer a revised full-year forecast on its earnings call. So nothing here in the statement that we can see just yet, but we may hear about that, Caroline, on the earnings call.
And that's going to be the key concern here, of course, is whether they have to pull back in terms of their full year. The revenue guidance for their full year coming from the company is 4.1 billion. The adjusted EBITDA estimates is for anything at 300 million or above. And the connected fitness subscribers, they want to see at least 2.275 million for the full year. The question is whether there'll be a brand impact, Carol, from the treadmill, whether there'll be an issue in terms of, well, forward-looking guidance sales. They were going to put a lot of marketing spend behind that tread, and they're going to have to shift gears.
Well, you do wonder about that. It's interesting. Cowen was actually out with a note today, and they said the Tread Plus represents only about 2% of hardware unit sales in their calendar for the 2021 financial model. What we want to know, though, Tim, is John Foley going to be on the call? Is he going to take questions about that recall and what it means? Because this is a company that image brand means a lot.
Yeah, and he did say earlier this week that he did regret the way that he reacted first when the company was first reported to have had issues with the Tread and Tread Plus. The company also saying, we talk shipping times for Peloton, because if we think about the pandemic and what has happened during the pandemic with Peloton, some people had to wait weeks and months to actually get one of these bikes. The company now saying that the average shipping times for its original bike are back to those pre-pandemic levels. So it does seem like it's gotten the supply chain somewhat under control, Taylor.
Yeah, Caroline, I mean, I think that you nailed it when you take a look at just some of the company statements that we're getting as we're trying to look through the press release, saying that we do see significant growth opportunities in a broad range of those international markets, though, of course, Romaine, no additional launch announcements to make at this time. We push forward to that earnings call to get more of that guidance.
Hey, you like alternative meat, don't you, Taylor?
I do.
Well,
Are
guess
you
what?
talking to me about
Beyond Meat coming out with
Didn't know where
earnings,
you were
and
going
apparently
with that.
Alternative Meat sending the shares down about 6% here in the aftermarket. 1Q net revenue coming in at 108 million roughly. That's slightly below what the street was looking for. The street was looking for a consensus of 113. Now, as far as the actual profitability here, they were looking for a loss. We knew there was going to be a loss. Street was looking for a loss of 21 cents. They got a loss of 42 cents. So not good. That's why you're seeing the shares move a little bit lower here. Not really seeing a forecast off the top, but at least on the basis here. And here's your forecast. 2Q net revenue. Here's your range, folks. 135 million to 150 million. That's your alternative meat.
Look at it fall after hours, down by 6%. Meanwhile, for radio, for TV listeners, we're also on the YouTube. Expedia, let's talk the reopening trade, guys. Expedia numbers, first quarter revenue, $1.25 billion, a beat versus the estimate of $1.12 billion. They're also seeing an adjusted loss per share of $2.02. The estimated loss was more than that. So clearly Expedia managing to galvanize itself as we start to want to book holidays, want to get back on planes. We're also seeing TripAdvisor coming out with a better than expected first quarter revenue of 123 million versus 119. So Carol, slowly but surely, we're seeing the reopening cracks really starting to shine a light in these stocks.
Yeah, absolutely. And what's interesting, and I'm taking a look at the stock here of these travel names in the after hours. I mean, Expedia is the one that's already up about 24%. So a lot of the optimism was already factored in when it comes to what we would possibly get from this company. All right, let me just get to Square, just crossing the Bloomberg terminal as we speak. And Square, first quarter net revenue of $3.16 billion. That's a little bit light. Wall Street was looking for a number of $3.37 billion. So we'll see how ultimately that plays out in terms of the trade here. You can see Square already down 2.3%.
Yeah, a flat year to date, but look, given what happened in 2020, Square was up 240%. So you wonder how much of what moving forward is actually baked into Square right now. The company has the leading digital wallet, but there are competitors who are creeping up on it. I want to hear any comments about cryptocurrency. Jack Dorsey loves Bitcoin, and the company has been buying crypto.
Yeah, and a lot of people not only look at that, but we really got to find out about what's going on with Cash App there. We should point out, Square puts out its earnings in that weird way that really frustrates journalists, where they don't actually put out the release. You got to click through about 20 things to find the numbers. But remember, the Cash App was a huge boost to that revenue here during the pandemic. A lot of people have flocked to that, and there's a lot of concern that that's not going to persist here in the post-COVID environment. So really want to see not only how that performed within the quarter, but more importantly, what type of forecast they give for that as well, Taylor.
Yeah.
I just want to come back to shares of Beyond Meat. I have them now down about 11%. And we've been talking a lot about some of the competition. Tyson Foods, it was earlier this week, announced that they were coming to market with a 100% vegan product. Caroline, we're getting comments from the CEO. Near term, they're trying to return to issuing some guidance. They've slowly started to see a thaw occurring within the food service domestic, a little bit more internationally. I'm going to dig through and get an understanding, perhaps maybe more clarity on why that was a big revenue miss.
And it's interesting, of course, on a day where we've been looking at the likes of Kellogg's doing so well. I mean, amid this story of inflation, they're still managing to be one of the best performers on the back of its earnings. We still are having this worried about alternative meats revenue misses. And overall, just to take a step back, this is still remains an earnings season where you really have to go above and beyond what the expectations are of the street to be able to impress him.
Yeah, just want to end talking Square. Romaine made the comment about the company coming out with different earnings at sort of a different way than other companies do. We are getting some more clarity here. The company's saying that first quarter hardware revenue coming in at $29 million versus estimates of $24.3 million. We are also seeing a redhead that Square did not necessarily release earnings.
All right, a lot of earnings, folks. Just go to Bloomberg.com to catch anything that you might have missed or continue watching on Bloomberg Radio and Bloomberg TV. That's going to do it for our cross-platform coverage on TV, radio, and also on YouTube. We'll see you again
so long, guys.
tomorrow, same time, same place.